Hashtag WLFI token collapse script. We invested thousands into a Trump-backed crypto token. Within weeks, we watched it crater. This is what happened to our money and why regulators are now stepping in. The World Liberty Financial Token, or WLFI, launched in September 2024 with massive hype. Trump's family was directly involved. The pitch was simple. By WLFI, earn yield through their lending protocol, get rich. We bought it at launch. By December, the token had lost 65% of its value. By early January, it dropped another 40%. Our investment was basically gone. Here's the problem nobody explained up front. WLFI wasn't just a token. It was the collateral for a loan scheme. Token holders could stake their coins, then borrow against them at supposedly incredible rates. It looked like free money. It wasn't. The moment people realized the yields didn't add up, everyone tried to withdraw simultaneously. The protocol couldn't handle the liquidity demand. Prices tanked. The numbers get worse. At launch, WLFI traded around $1.30. Today, it's hovering between 25 and 35 cents. That's a loss of 73 to 81%. The token's market cap collapsed from $4.2 billion at peak to under $750 million now. Billions in investor value evaporated. But here's what's actually serious. The SEC and Treasury Department are now investigating whether WLFI operated as an unregistered security. The token promised investors yield. Under securities law, that's a red flag. You can't just issue tokens that generate returns without regulatory approval. World Liberty Financial didn't get that approval. They're now facing potential enforcement actions that could force the shutdown of the entire lending protocol. The loan scheme itself was the core problem. Token holders staked WLFI and could borrow dollars against their stake at rates between 12 and 18% annually. Sounds good until you realize the borrowed dollars had to be repaid with interest. The math only works if token prices keep rising or if yield becomes unsustainable, which is exactly what happened. Once price momentum stopped, the whole structure collapsed like a house of cards. What we didn't see coming was how fast institutional investors would exit. On-chain data shows that major holders began dumping their positions in late November. By the time retail investors like us noticed the problems, the smart money had already left. We bought near the top. We held through the collapse. The regulatory response is now accelerating. The CFTC has also launched inquiries into whether World Liberty Financial properly registered as a derivatives platform. They didn't. Multiple state attorneys general are investigating consumer complaints. There are now class action lawsuits being filed. Some investors are claiming they lost their entire life savings. This matters beyond just WLFI. This case will define how regulators treat celebrity-backed crypto projects for years. If the SEC wins enforcement action, and they likely will, every other token-backed lending scheme will face immediate pressure. That means more crashes coming in similar projects. For anyone holding WLFI right now, the math is brutal. Recovery to previous prices would require the protocol to be rebuilt from scratch with full regulatory compliance. That's possible, but it's years away, not months. Most investors won't wait. Subscribe to CryptoSenius for daily financial intelligence. We break down what actually happened before the hype machine does.